Third deal today is the big one I really want to dive into. So SNPR, this is the same SPAC team that brought Hyliion Holdings public. I still own my shares of Hyliion, HYLN. Tortoise Acquisition Corp 2, symbol SNPR, is taking Volta Industries public. So Volta is another electric vehicle charging infrastructure play. We've seen lots of these deal announcements for SPACs. So valuing the company at $1.4 billion, it's going to give Volta $600 million in net proceeds to fund the build out of that charging network. So Volta is a little bit different from some of those other charging plays. They kind of operate as a media company as well, because they put giant screens at their charging stations that allow the retailers to advertise outside of their existing buildings where those charging stations are, or they're able to sell advertising space to other companies. So, really bringing in a different revenue stream to where these charging stations are actually making money, even if they don't have vehicles hooked up to chargers at the time. So this one's getting loved by the market, and I think it comes with good reason here. So the chief technology officer of Volta is Praveen Mandal. So he was the co-founder of ChargePoint, which of course is going public with Switchback Energy, SBE. So Mandal is actually recognized as the inventor of the network charging station concept. So what a great team member to have here for Volta. Tortoise Acquisition Corp 2 shareholders are going to own 17% of that new company. So they have charging stations in 23 states, over 3,000 screens at 1,500 stations. High growth plans with the electric vehicle market growing and those vehicles getting cheaper than gas-powered cars over the next couple of years. So the presentation estimates that $25 billion will be spent on public EV charging stations, including Biden's call for 550,000 charging stations. So they also compare themselves to gas stations in the presentation, which I thought was a key here. They call it a $500 billion, market with 150,000 gas stations. So, what happens if we get rid of gas-powered cars? Who replaces that? Who makes up the revenue? So if you've been to lots of gas stations, they have those digital screens there, for that additional advertising revenue. And that's kind of the model that Volta has here. So they estimate that by the end of this year, they'll have over 3,100 stations. They have contracted deals for another 1,100 stations. And then their pipeline calls for 20,000 screens and 10,000 stations across 5,000 sites in the US. So revenue of $47 million for fiscal 2021, but they see that growing over 100% annually, hitting $826 million by fiscal 2025. And in fiscal 2025, they see that revenue split 56% from charging network, 37% from behavior and commerce, and 7% from data. Gross profit of $8 million in fiscal 2020 on margins of 31%. They see that margin, rising, and their gross margins are actually estimated over 10% higher than competitors like ChargePoint, EVgo, and Blink Charging. So they actually see a $1 trillion market size sitting at that crossroads of vehicle fueling, media, and data. This is a SPAC that should be on your watch list. We've talked charging infrastructures before. I, of course, own SBE merging with ChargePoint, but I really like the advertising play here to get that additional revenue locked in.